So I have brought my wonderful friend and colleague, Richard White, our trusted mortgage advisor, to come and speak today about the current state of the lending market.
Thank you for inviting me on. And I currently am working with Legacy Home Loans, which is a division of Panorama Group. I work as a mortgage banker, so we have multiple lenders that we use to fund loans for our clients.
Okay, so you have a wide range of information for us, and you've been doing this for 25 years, you said?
Well, it's actually 29.
29?
29 years. And 29 years. I've worked as a broker. I've worked as in a big bank. And I've worked mainly for the last 10 years or so in mortgage bankers, because I like having multiple resources for my clients. Recently, there's been a big part of the market that has suspended their services or quit doing business altogether, our non-QM, our alternate income documentation. But that was one of the things I enjoyed, that I was able to help all clients, regardless of what their situation was, regardless of the credit scores, income documentation, asset documentation. We could help all types of clients. Now we still can help the majority of clients, as our credit scores go down to as low as 620, with an exception. But the guideline, we do 640, which I know I did some checks with some of the major banks, and 680 seems to be the credit score that many banks are capping at 680. We actually, again, go down to as low as 620 on an exception, but it's 640. Now, one thing that has changed, you need to have a little bit of money in the bank, which most people do when they close, after they close a loan or close a purchase. They usually do have some reserves, but now it is required for us to at least have 2 months reserves.
Oh, it's 2 months. Okay.
At least 2 months. Now that's with us. So keep in mind, when we're working as a banker, we have a lot of resources where we actually can place our loans, sell our loans off. So some are higher credit scores and higher reserves. Again, as I mentioned, I did speak to a couple of my past colleagues that work in banks, and I know one of them is 680, 6 months reserves.
The number one crisis we're going through right now is health crisis. The second one is economic, which is why there's so much information and there's so many. I think people are a little confused. They're not sure what to believe. It feels like everyone's telling a different story, which is why I wanted to talk with you and put this out to the world, because you've been in so many different parts of this. Hopefully we can get some clarity, because buyers are still buying and sellers are still selling. So how do we do this?
So one, things change on a daily.
Yes.
I prepped for this and had to re-prep. And again, in the meeting I had this morning, guideline changes came up. Now, the good thing is, as of right now, at least on my company at Legacy, it's gotten better. The 620 credit score that I told you, that was something new that I found out today. It was last week. We bumped it all the way up to 660. Then it came down to 640, and now we're good down to 620 on an exception basis. What else has happened is the DTI, the amount of income versus your debt to income ratio has now been brought back up to the 55%, which last week, when the first time we got a slash in the guidelines, it was down to 45%. That can make a big difference on you qualifying for that refinance or the property or not. So that was a big difference. But again, why I enjoy more working as a banker is because I have all those different options, and it's not just one. Hopefully your credit is decent and your income is document it, because those are the main things. You really have to be able to qualify. Things change on a daily. So this is from last week. They cut 25% off of the income for self-employed.
What does that mean? That means that if
So that means if your taxable income, or your net or the qualifying income from your taxes was $100,000, now it would be $75,000.
I see. And this is
So
self-employed.
that is on the self-employed, because
What about the W-2 people?
W-2 is no cuts on the income. The thing is, we do have to verify the day of funding, or at least a day before funding, that you're still employed. And not, some of this gets more technical, but generally we do always have to verify you're employed.
Right.
The rule is 10 days before we close. But those verifications can be through a system called the work number, or some type of non-verbal verification. Now we have to speak to someone on the phone that says you are employed.
Oh, really? Because it used to be something like you could use a letterhead from the company or something like that, but now you need to speak to somebody.
Yes, that is a different rule. That is the day before we have to verify you are still employed.
Okay.
Yeah, something popped on my screen. Let me try to get it off, because I can't see your lovely face, Fatima. Okay, there we go. Alrighty. Yeah, so, we have to be on top of it. Again, like, one of the other ways I work is, I'll have a handful of people that I'm working with. So it's not like I'm working with 50 or 100 people at one time. So it's more of a personal relationship. So yeah, so I can be on top of making sure you get what I need you to get, and I'm coaching you ahead of time, because honestly, the person that I was talking to is a pre-approval. Now, I'm aware that they have offers pending, but they're not even in escrow yet. But I need them to get, be ready, because it's part of the job is to carry them through the process, because the process itself already is it's possibly the biggest and most difficult thing someone is going to go through. And then now we add all of this extra, and they're still part of the community, part of society. So they're still dealing with what we're dealing with, that maybe we're going to get sick from a virus.
Oh, it's really,
all of that. And you're trying to buy a house or do something. It's a wild time, but it actually makes me feel more valuable in doing my job, because for me, my job is to help you get through this process to buy a home or refinance your home or what have you.
well, I mean, that's what it is, isn't it? Like, we're helping people during this very stressful time. Our clients' needs are sacred, and we just have to really listen to them and make sure that we are handling every single concern aspect of it, and just shepherd them through this process, because people are still buying and people are still selling. So let's say, okay, so obviously if you're not gainfully employed, right now is not the time for you. Now, if you are gainfully employed, but you're just a little nervous about what's going to happen, what would be your recommendation in terms of making sure you feel financially confident to move forward?
I'm on this end, and I can say, if you're gainfully employed, and what I tell people, jump into it, because there's less people. There's a chance that the property is going to be a lower price, and you might be missing out on an opportunity. Definitely. I had that conversation yesterday with one of my pre-approval clients, and she was pulling out or going on hold for 30 days. And we talked about it, and I gave, it's it, because you are one of the people that actually are employed. So why jump out of the market when you might be missing an opportunity? At least do a soft stay, look, and keep looking. And more of the conversation came in, and it turned out, well, by the end of the week, they're actually having a conversation. Her job, they're having a conference call to see if they're still going to be employed. So that's where I was saying that you kind of have to figure it out. But if you know you have your job and you're not losing your job and you're looking to buy, jump in. and see, because there's some great opportunities to do it.
Sellers should be selling because we're low on inventory. Buyers should be buying because the competition isn't as strict. It doesn't mean you're going to get a house for nothing. I think that we're equal. I think we're in a seller's buyer's market and it's equal right now. But you might get a house for market value now and you won't have to bid up for it. So it is a really great time. If you're selling a house, it's a great time for you in general because you have so many buyers who are still looking and need to move because of life choices. I know they extended the amount of time if you're doing a 1031 exchange, so you have a little bit more time to look into your investment property. But I think the concern is that there was a lot of talk about how banks were tightening up. And they were concerned about giving loans, and this is just what I heard, because they were afraid that if they give a loan to somebody and the next month they're suddenly laid off, then they don't have to pay their loan for 90 days. Can you speak to that?
That is a big issue on the lender side, where we are, as a mortgage banker, we are going to initially lend the money, and we plan to sell that loan to the investor within 30 to 60 days, which is the case in many places, even banks. Most of them are still going to be selling that loan to Fannie, Freddie, or Ginnie. So that's going to happen. Now, where the big risk comes in, where if the client doesn't make the first payment, that loan becomes unsellable. So that's a big issue. And if that becomes unsellable, that means you have to keep that loan on your own books and maybe sell it off later at a loss. And that could be enough of those could be the difference of a company being in business or not in business. So one of the things my company has done is we're asking the borrower to sign an affidavit stating that they intend on making the payment and not going into any type of forbearance situation.
Well, but I was surprised by your comment on the 2 months, because I would think they would want a lot more of income available in order to pay your mortgage because of these times, because you don't know if you're going to get laid off.
Yeah, well, that's the thing, that keeping, things real, a lot of people, depending, and it probably starts to change as you go up in price, but when you're in the conforming limits, especially under the 510 loan amounts, even under the 7, often, especially with your smaller loans, if someone is buying at that price, there is a good chance that they are using much of all of their money. I mean, we have, the down payment assistance. There's one of the things that, a lot of people have the credit and the income, but they may not have the money, the down payment, closing costs, and all of that. And if you use down payment assistance, or you use most of your money to get in, you may not have reserves. And a lot of loans allow that. No reserves once you close. And now that being changed to 2 months, yeah, like you said, the lenders, yeah, that's something that maybe they should have before, but you kind of have to give everybody the opportunity to buy a home. And if rules start to get too tightened, then you're going to have a lot of people that aren't able to buy.
And how many days are you seeing on the loan contingency amount of time?
My last loan recorded today, and this would be it would be the 25th day.
Oh, so escrow. 25 days.
Yeah.
So you're not really seeing a delay.
No, and again, my colleague closed one too that was 22 days.
Oh, fantastic. Wow.
So yeah, so there's not the only thing and I can only clearly speak on how it works at my company at Legacy. The only thing that is taking longer is appraisals, and that's it. I mean, we're 1 day turn time basically on every step. So there's no reason for it to take any more time at this point, and except for the appraisal. It's 6 to 8 days for an appraisal.
Okay, so speaking of appraisals, are they allowing drive-by ones if the house is not vacant, or how is that
It
working?
depends on the loan program, but yes. So my understanding is on conventional loans and refinances that are not cash out, well, here's the deal. We have an automated system, either the loan prospector or direct underwriter, and so DULP. If they give a appraisal waiver, then there may be no appraisal altogether.
Okay.
Or if it says a drive-by, then that will be the appraisal. But from my loans that I'm currently doing that have cash out and some down payment assistance, it's a full appraisal.
Okay. So
Yes.
are they so we've had a lot of economic stimulus happening. Some people have gotten some of their funds, some people haven't. So the amount of forgivable loans that come into play for independent contractors, small business people, sole proprietors, or the stimulus where you might have gotten money from the IRS, how does that play into what you're considering for amount of money in your bank? Is that seen as does that help you?
Okay, so that's a good question. And I am going to go off of, since I've been doing this a while and how these things should work out. The stimulus is not a loan.
Right.
You don't have to pay it back. Right. It's going to be similar to a tax refund. So the moment you get it, it's going to add to your assets, and there will be no further documentation needed. It's all good.
Great.
A lot of people buy at the time that they're getting their tax refund, and it doesn't matter what amount it is because it comes in, it says who it's from, and there it is. If there's any documentation needed, it would be matching what your taxes says as far as tax refund. That
right.
We have your taxes, or if we have your taxes, this is what you were supposed to get. But that should be no problem.
Oh, great.
As far as a SBA loan, I guess, or something like that, that's a loan. And a loan and using that as your assets doesn't really go together.
Does that change your debt ratio?
I cannot confirm that. I would have to see. But if it is a loan on your credit report, it should hit your debt ratio. Definitely.
Local loans are forgivable if you use it for certain things. So
yeah, but that gets too much. That starts to be like student loans. I have clients that there's programs that they're going to get their student loan forgivable. Until you get that on your credit report and you have that letter that says your loan has been forgiven and it's being removed, then we can't use it at that time. Until then, we're still hitting. I can't take that it's going to be forgiven in the next 3 or 4 years and we don't hit you for that debt. So no, right. I don't believe that. And like I said, as far as getting a loan for your down payment, that actually violates some of the underwriting rules anyway.
Oh, okay.
Yes. Now, with that said, if the money is already in your account, if we're getting 2 months of bank statements and then we don't see the deposit, then who's to say where that came from? So then it may not come up. But that is because I've had clients before that did cash advances on their credit cards and it delayed the whole process because you can't borrow money for your down payment and closing costs.
Right.
I mean, you can borrow money, but it has to be an approved type of loan, grant, or what have you.
Well, we're certainly in different economic times, and obviously this is very unprecedented. But I think people are sitting at home and they're looking around their house and saying, do I want to live here? And so I think people really do want the answers to these questions because they want to know if they can move forward or not. Maybe at the top, just a few things people can do right now to get themselves ready if they're gainfully employed and they want to purchase a home.
Well, top one or top two will be called Fatima Malik. And then if that's number one, then number two is to call Richard White.
Yes.
So that's definitely, you want to get with a professional to help guide you through this. And I would say this is definitely not the time to do any type of online anything, because you need the advice of people that are getting the information, which is changing on a daily basis.
Sometimes an hourly basis. I was on 6 calls.
Yeah. Oh yeah. Yes, definitely. And then, yeah, really that's mainly it, because because you have either have already done everything you need to do to be ready to buy, or you haven't, and you're going to get coached into what you need to do. What's the next steps? But definitely you got to get with a professional. This is not a time to
try to do it by yourself.
Figure it out yourself, or go looking at you. I mean, there's not open houses to be popping into and all of that. So you have to.
We're doing everything we can to serve our clients. And so now isn't the time to try to do things by yourself. That's for sure. But there are a lot of rules in place. Would you recommend, I know a lot of people are putting everything on the credit card right now because they're not sure, they're a little bit afraid to make payments, they want to make sure that they're liquidable in some way. What advice would you give them?
It's hard to say a blanket advice on what people should do with their finances. I think people generally are going to do what they've been doing.
Right.
But if you're not sure if you're getting paid next month and you got some money now, you might want to hold on to it. You have to, you have to see there. I mean, there's certain, stimulus or new programs or rules that maybe you can't get evicted now.
Right.
Or maybe you don't have to make your mortgage payment.
Right.
But that is still going to be a short-term situation. I don't believe in any of these. Are you going to be able to not pay your rent today, next month, and the next month, and never have to pay it?
Right.
Because what about the person you were paying it to?
Right.
And the same with the mortgage. Even though that might be an entity, but still, at the end of the day, that is going to hit somebody's pocket. So you're more than likely going to end up having to pay it back. And I'm not 100% sure on the terms of these repayments.
Right.
So I would say be cautious right now. I mean, if you're in that situation, be cautious, because whatever you create today, you're going to have to deal with that tomorrow.
That's really good advice. That's very good advice. Well, I'm going to put Richard's information in the summary below this video, so you can reach out to him directly. I'll have my information in there too. I think we need to do a part 2. We need a little more Richard White in our life. So I'm going to schedule that and we will get more information to you. If you have questions that you would like me to ask Richard about during our next session, go ahead and either put them in the comments or send me an email. My information, once again, will be in the summary, and we will go back to Richard. Thank you so much for joining us today. Lots of great information. There's a lot to sort through, and I feel like you made it a little clearer for us, so thank you.
Oh, you're welcome. Thank you. My pleasure. I'm glad we did this. We've talked about doing this prior to this event happening, but yay. And you know what? That's a positive. We actually, we did this. We did it. Okay?
More valuable than you would think. So it's definitely, we have to roll with the changes. So
right.
We'll say very exciting time.
Yes. Thank you very much.